Welcome to the Fintech One-on-One podcast. This is Peter Renton, Chairman and co-founder of Fintech Nexus. I've been doing these shows since 2013, which makes this the longest running one-on-one interview show in all of Fintech. Thank you for joining me on this journey. If you like this podcast, you should check out our sister shows, Pitch It, the Fintech Startups podcast with Todd Anderson, and Fintech Coffee Break with Isabel Castro. Or you can listen to everything we produce by subscribing to the Fintech Nexus podcast channel. Welcome to the podcast, Sam.
Hey, Peter. Thanks so much for having me.
My pleasure. So let's get started by giving the listeners a little bit of background about yourself. I'd love to kind of get a sense of what you've done, some of the highlights of your career before Ocrolus.
Sure, Peter. Happy to jump into that. I mean, Ocrolus really has been my entire professional career. Started building the company when I was 22 years old, right out of college. Been working on it now for, believe it or not, 9 years. Time flies when you're having fun. And it's been a really, really awesome run over the years. And, I think just for a little background, prior to Ocrolus, I grew up in Long Island, New York, about 45 minutes away from the city. I went to college at University of South Carolina. Go Gamecocks! Still a massive Gamecocks fan here today. And I started the company when I was 22 years old. My founding partners were my high school buddy, John Gersey, as well as my dad and his former business partner, Victoria Meakin. Really thankful to have my dad and Victoria, who were entrepreneurs during their career, to help me and John get the company off the ground and really hit the ground running. When we were fresh out of school. And as I mentioned, it's been a lot of fun building Ocrolus over the last 9 years.
So then tell us the founding story. You're 22 years old, launching right into this after school. What was the impetus for the actual founding of Ocrolus? And was that sort of the plan all along, to just go straight into a company right out of college?
Well, I joke that, both environmentally and genetically, I had no choice but to be an entrepreneur. My dad is a serial entrepreneur. He started a bunch of companies over the course of his career in many different sectors. When I was growing up, he was building a company in the payment space called Phone Charge that he started when I was a little kid. He scaled when I was in elementary and middle school, and he ultimately sold it when I was in high school. So I was naturally interested in following my dad's footsteps. He was my number one mentor and role model, and he was in the financial technology space. So I was kind of interested in fintech as a whole before the term fintech was really even coined. Mm-hmm. Throughout college, my buddy John Gersey and we bounced various different entrepreneurial ideas off each other. And we had 3 or 4 that kind of almost made it to the company formation point. But as you know, you have to have just a tremendous amount of conviction to really dedicate your whole life to something. So during that exploration phase, we landed on what became Ocrolus. And the genesis from Ocrolus actually also came from my father. My father was telling John and I about a conversation he had with his elder law attorney. And the elder law attorney was complaining about having to review hundreds or thousands of pages of bank statements and financial records for every Medicaid application. When someone applies for Medicaid, for long-term care Medicaid, to enter a nursing home, they're required to submit 60 months of financials to prove that they're eligible for the benefits. And these 60 months of financials are reviewed literally page by page, line by line, in an extremely manual and tedious fashion. So when my dad told John and I about this conversation, we were shocked. Why is an expensive lawyer spending his whole day reviewing financial documents page by page, line by line? There has to be a technology solution out there to do this type of work. So it started more as a research project. We looked at dozens of different optical character recognition software tools on the market, data capture software, etc. And we were pretty surprised to find that across the board, machines could really only do about 70 or 75% of the work in terms of extracting information from financial documents. Through this research process, we recognized that there was a way to do this much more efficiently with our idea, which was a combination of machine learning plus human in the loop to do the job perfectly accurate every single time. And we kind of jumped right into it. We pretty quickly thereafter realized that lending was a bigger and better market than Medicaid, and the whole thing started snowballing from there. But it really was what was sparked from my father having a conversation with his elder law attorney about Medicaid paperwork.
That's really interesting. So I want to sort of dig in to understand what it is your technology does, because I know that we'll talk about the lending space in a little bit, but you like you said, there's OCR different. There's been packages out for decades, I think, in some cases, and yours obviously is a more sophisticated than an off-the-shelf OCR package. But what is it that it does exactly?
For sure. So, going back to the root idea, right? A software that is attempting to read information off of financial documents. The reason that it is so complex to read financial documents is they come in so many different formats.
Mm-hmm.
The US has a very fragmented landscape of financial institutions. There's 5,000 plus banks out there and hundreds of thousands of pay systems. So if you're looking at documents like bank statements and pay stubs, prior to Ocrolus, many of the software companies that tried to build products to streamline this task went with a template-based process. It's very difficult to build templates for such a long tail of different formats.
Right.
And it requires a massive amount of maintenance and upkeep and template building. And a bank adjusts its template region over region or year over year, so the template breaks and you have to build a new one. So the problem was consistency of being able to read every format, regardless of the quality and the structure of the document, with a high degree of accuracy every time. And that's where OCR really falls flat. So we were pretty surprised about this during our research, that there was no technology to do this work for a wide variety of different documents. And really the kind of aha moment for the business model at Ocrolus was piggybacking off of the Google Books initiative. So during our research of OCR, we stumbled upon the Google Books initiative. And what we learned was that Google used OCR to digitize millions of old books, menus, and magazines. However, they weren't able to read every word correctly. They ran into weird fonts and lower quality images and different formats, and they struggled with the same type of accuracy concerns that I've been describing.
Mm-hmm.
So what they did was quite brilliant. They snipped the words they couldn't read with a high degree of confidence, and they routed them to people like me and you, asking us to prove we're not a robot and validate a CAPTCHA task. So, many of us don't know this, but we've been performing data labeling work for Google by doing these prove you're not a robot forms. And Google introduced all sorts of cool quality control techniques as part of that process. They routed the same task to a statistically significant number of individuals to make sure we all agree on the characters. Another example is sometimes you'll see two words in a form box. One is a snippet from a 1930s New York Times article. The other is a control word that they're using to measure whether or not you validated the snippet correctly. Long story short, through a combination of human in the loop, prove you're not a robot tasks, and algorithmic checks to make sure that we are doing the work correctly, Google was able to create a library of 30 million plus books, menus, and magazines that are searchable online with perfect accuracy. The kicker is they took that perfectly accurate data and used it in a feedback loop to train their systems to constantly get smarter so that machines could perform the tasks in the future that humans used to populate for Google. Okay. As a complete aside, they've now moved on to training their maps engine. Which one of these is a crosswalk? Which one of these is a stop sign? Right. Which one of these is a fire hydrant? Exact same thing. But in any case, we were enamored by this idea, and we had we took the concept of, let's take this human in the loop piece and apply it in a very targeted way to financial documents, to read bank statements, pay stubs, and other financial documents with perfect accuracy on every single pass.
So then what happens when you're coming up, one of your clients is coming up with a pay stub that you've never seen before? It may be a new software tool. It may be done manually for all, but it's obviously it's in PDF format, shall we say, never been seen before. What do you do?
That's the beauty of the software. We can handle any format, regardless of if we've seen it before or not. If a brand new credit union or bank pops out and we see the document for the first time, we can process the data with over 99% accuracy. Over time, our platform has gotten much more sophisticated. Today, we use a waterfall of automation techniques. We use templates and machine learning and off-the-shelf OCRs with plugins to Google and Amazon. And we kind of use a waterfall of different automation techniques to get us the highest possible raw accuracy. But the beauty of the system is we also have 1,000+ data verifiers who work for Ocrolus. So we have employees in clean room facilities that intelligently verify components of the document that we couldn't process with a machine-only response. So for that example that you just described, if a statement comes in and we've never seen before, it might take us more human steps to get to the accuracy that we strive for. The customer will still get perfectly accurate data, which is absolutely critical for high stakes decisions like lending decisions. And then over time, as we see more at bats at that document, we figure out ways to automate it and drive down the turnaround time, minimizing the human task. So, quick example is when we first launched the product, we were guaranteeing our customers a 48-hour response time. Send us documents, you'll get data back in 48 hours, and it'll be, very high quality data. Mm-hmm. Today, we process more than half of the documents we see instantly with no humans whatsoever. And our 75th percentile is actually 10 minutes or less. So 365, 24/7, around the clock, drop us a document. In 10 minutes or less, you're going to have a perfectly accurate borrower profile that you can use to make these lending decisions.
Right. So I imagine if you're getting, say, someone with ADP as a payroll stub and a Bank of America bank statement, you've seen every possible permutation of those already, I presume. And so those are the ones that are completely automated, right?
You nailed it. And then the blurry community bank with someone's thumb in the picture, rotated sideways, upside down, those are the ones that require a little human work. But the beauty for the lender is, all of this back office labor that they used to view as that they view as a necessary evil, not as a core competency. So we not only handle the machine part, but we also handle the QC. And then over time, we've layered in fraud detection, analytics, and additional services to give our customers a truly best-in-class solution.
Okay. So then you touched on it, you've sort of built this for kind of Medicaid applications, but you pivoted to lending. Why did you start there?
Great question. I mean, I think, we were open-minded in the beginning. We knew that the concept of extracting information from financial documents had applicability to a wide variety of industries. Mm-hmm. Medicaid, of course, was the impetus. Lending, wealth management, insurance, government applications. There's a wide, possibility for where we could point the software. During our beta phase, we were onboarding customers to start trialing the product, and we got introduced to Andy Reeser, the CEO of Capitus. They were called a strategic funding source at the time. They're a large small business lender here in New York City. And we went in and did the demo for Andy and for Arun, the chief product officer at Capitus. And immediately they saw the vision of Ocrolus. And they said to us, we've been searching for a product like this for years. We review lots and lots of bank statements. So we said back to them, how many pages do you review? That's our metric. How many pages or documents to review to kind of get a sense of how big the opportunity was.
Right.
And they pointed out to a bullpen of teams of people just reviewing bank statements and performing cash flow analysis. And they said, we could be a massive user of your product. And if we bite on this, then over time, you will be able to scale in the small business lending space because our competitors also need this. But they had a couple of requirements. They needed faster response time. The original 24, 48-hour response time was not sufficient for them. The original, their ask was for us to get under 4 hours. And secondly, they wanted small business specific analytics. The first version of the product, the beta version, all we did was take transactions off of a bank statement. What the team at Capitus asked us for was synthesis of that data. What they really want to understand is, hey, this pizza store is applying for a loan. What's the pizza store's revenue? What's their debt capacity? Have they had any negative balance days? What do their seasonal cash flows look like? So Capitus collaborated with us on building out the first set of SMB specific analytics. Mm-hmm. And through that relationship, it became apparent to us that the combination of shorter sales cycles and high average customer value was very attractive. And we made the risky decision, which ended up being a great decision, to kind of put Medicaid on the back burner and say, hey, we're only going to focus on small business lending. And we are going to become the leading technology player in that space. We did just that, and it's been fascinating to be a technology provider in the industry, just as the industry itself has really taken off. I mean, we were fortunate to be involved in the early days of Fintech Nexus, some of the original Lend It conferences. Mm-hmm. We go to a debanked conference as well, which is another small business event. And when we were first getting involved in fintech lending, it was a relatively small community. Yep. We started selling software into this community just at the time that fintech lending itself started taking off, and it ended up being the right mix for us to really scale the business. And over time, I think we've done a great job of listening to our customers and just building additional product enhancements that the customers and lenders are requesting for us.
Right, right. And so I know you're pretty strong in fintech these days. I mean, I see a lot of lenders, not just small business lenders, using your tools. Are you what about, like, obviously banks do a lot of lending, credit unions do a lot of lending. Are you kind of making inroads there these days?
We are. I mean, we are moving to new asset classes and constantly onboarding new customers to the platform. Small business lending is the primary use case of Ocrolus. That was our flagship product offering, as a bank statement cash flow analysis product for small business lenders. We now have more than 100 small business lenders on the platform. Enova on deck, Bluevine, Capitus, Fora Financial, Funding Circle, Pearl Capital, many of the leading PayPal, many of the largest originators are now using our product for underwriting automation in small business. More recently, about 2 years ago, we expanded beyond small business lending into consumer and mortgage lending. In particular, mortgage is the biggest area of opportunity for us because there's such a massive amount of documents in the average mortgage application. In addition to bank statements and pay stubs, a mortgage application has tax documents and appraisals and kind of a long tail of different forms. So we service customers like SoFi and Lending Club on the consumer side. We now have 6 of the top 25 mortgage lenders using us for at least one document type, and we are constantly expanding our footprint in the lending space.
Yeah, interesting. I imagine mortgage is a massive opportunity because, as you say, it's highly complex. So then we got to the pandemic. Must have been very interesting for you guys because, in some ways, small business lending stopped, and then in other ways, it was never bigger than before with the PPP program. So I'm curious about your technology was probably incredibly important in sort of in these PPP applications. But tell us a little bit about what the work you did then and how that was an accelerant for you guys.
It was a crazy time. I mean, the world kind of hit a crazy point in March 2020, and particularly for Ocrolus at the time, small business lenders were the entirety of our customer base, and kind of overnight they stopped funding. Right, they just completely paused funding as businesses were forced to shut down. So it's a pretty scary thing as an entrepreneur to see your revenue effectively go to zero overnight. I think we learned some good lessons in terms of committed revenue in your contracts and different ways to structure our agreements moving forward. But at the end of the day, we are very tied to the small business lending space, and we wanted to play a role in helping the ecosystem as a whole power through a tough time and persevere to the other end. And in particular, the real folks that we wanted to help were the small business owners, right? Small business owners were in a really grave situation, and when the PPP program came out, access to capital was the name of the game. So as PPP was rolled out, a lot of the big banks took on the responsibility to hire staff members to come in and review PPP loan applications. Whereas some of the fintechs tried to solve this with technology, and Ocrolus was a vendor along with Plaid and others to help allow the fintechs to really scale up and service this community of small business borrowers. We were fortunate to work with some top lenders like Cross River Bank and Square, for example. And what we built is an automated flow to handle PPP documents. An application for a PPP loan required the borrower to submit documents like 941s and 944s and payroll reports. Because we have the human in the loop offering, we were pretty quickly able to spin up support for those documents. And then once we saw a few thousand of each of them, we were able to minimize the human work required to process the document and add automation to help our customers really scale. It ended up being a great success story. Our customers were able to serve the local florist or pizza store owner or nail salon. And in many cases, those true small businesses were not able to get access to capital from traditional banks. So it was a really good, kind of goodwill story for our team to rally behind. And what we've seen since then is pretty interesting. I think there are more borrowers than ever that are now interested in applying to our customers, which are the fintech small business lenders.
Right.
I think a couple factors to that. One is just a smooth application process. It's very satisfying for a business to apply for credit and get an answer, in hours or a matter of a day versus going to a bank where they might be put in a waiting room and might never get capital at all. And secondly, I think the PPP was an eye-opening experience for folks that were only used to in-branch interactions. The PPP required folks to go through an online process, whether they wanted to or not, because the banks were literally shut down. So our view is there's a segment of borrowers who weren't even aware that online lending was a thing. They got a PPP loan for the first time through an online process, whether it be through a bank or through a fintech lender. And that was kind of a moment that said to them, hey, for my ongoing capital needs, I should look to the OnDecks of the world because it's just such a smooth experience that I wasn't privy to prior. So, now moving into late 2022 and 2023, there's a whole new set of problems with cost of capital on the rise and conversion rates and default rates and other things. But we've powered through the pandemic, and our customer set came back stronger, and we were excited to have played a role.
Right. So let's talk about what's happening this year, because obviously you have a great window into application volume and whatnot. But I'm curious about how the fintech lenders, or even the bank lenders for that matter, are preparing for the potentially challenging times. Of course, we don't know. We obviously have inflation, which has been a hit for a few lenders. But I'd love to get your sense of where the small business lending landscape overall is at as we're kind of getting into 2023.
For sure. So I think two different buckets. In mortgage lending, the number of applications is very tightly coupled with the number of funded loans. And I think the biggest area of interest in the mortgage space right now is operational expense reduction. Just figuring out how to make their back office more efficient, which is something that Ocrolus does great at. On small business, there's this interesting phenomenon where the demand for credit is very high, but the conversion rate, the number of funded loans, is lower. There's also been an uptick in fraud in the industry. I mean, I think one thing that happened during the PPP is all sorts of people were trying to game the system and create fictitious businesses and create fictitious documents and do all sorts of crazy things to try to get capital fast. And fraud is still has still continued to be a major theme in 2022 and in 2023 as well. So what we're focused on is helping our customers clean out the funnel more efficiently, qualify borrowers to determine who should be kicked out and who should they spend more time on, performing fraud reviews. One of our newer most popular capabilities is our fraud detection capability. We call it Detect. What we do is we look at the metadata of a document to see if it's altered or photoshopped or manipulated in any way. And we catch all sorts of crazy things in small business lending. Folks who will add extra zeros to their bank account, or take a 2019 statement and make it look like a 2022 statement, or cross out transaction details and put another transaction description on top so it doesn't look like they took a loan from a competitor previously. So that fraud detection component is major value add for our lenders. And then also on the analytics side, just better decision. It is complex to calculate the true revenue of a business. Over time, Ocrolus has been fortunate to get inputs from 100+ lenders in terms of building in the right deductions and inclusions to our revenue calculation. And in a time like this, data accuracy and analytics accuracy is extremely important for credit risk modeling. So I think the net of it in small businesses, lenders are doing their best to deal with an influx of a wide demand for capital, efficiency in cleaning out their funnel, and really ensuring that they're selective in terms of funding the right borrowers who will pay back the loans.
Interesting. Okay. So then what is your actual business model? I mean, are you a SaaS company? Do you charge is it per document, a monthly fee? What do you do?
We charge either per document or per application, and over time we've moved more towards the per application side. I think it just really simplifies the return on investment for our customers. Way back in the day when we started, our original business model was a per page cost, but what we've realized over time is it's much easier to communicate with lenders in terms of per application. So we charge per application, and we contract with customers in two ways. We do have an on-demand component where customers can use us whenever they want, 365, 24/7, just pay up, send us applications and pay as you go. We also, and this was a learning from the pandemic, we've implemented a committed revenue component where for a lower cost, a customer can subscribe to a predetermined amount of applications. And based on the volume that they subscribe for, they get a discount, on a per application basis.
Right. Gotcha. Okay. So then it doesn't matter for those because obviously there's some documents, like someone might have a 50-page bank statement and some might have a 2-page bank statement. And if it's completely automated, I imagine the cost is very, very similar for a 2-page document as a 50-page document for you. But is that I'm trying to get at is the more complexity is that more expensive for for your clients? I imagine there's more work involved for you, it would have to be, right?
Right. So, I mean, we do have a human in the loop component to our software.
Right.
So it's not true SaaS. We try to put as much as we can in the true SaaS bucket. And over time, the system gets more and more automated and we can process more documents with a machine only perspective. But we also have fixed costs of, paying our team for the tasks of performing this data verification. I think that the evolution of Ocrolus is at first we were a document analysis company, and we at first had a cost for every single page that we processed because we didn't have much automation in the system at all. Over time, we built out the automation, but more importantly, we built out the intelligence. So today, the OpEx component is one element of our value proposition.
Right.
Scalability and speed is massively important. In fintech lending, it's often the first person to offer the borrower a loan that gets a borrower to accept rather than the person who has the best terms on the loan.
Yep.
Similarly, we've added in these fantastic layers of fraud detection, cash flow analytics. We're building some interesting scoring capabilities in the small business space. So as the product has become more polished and comprehensive over time, it's allowed us to move to more of this application concept, which also resonates much better with our customers because that is the unit of work that they are used to.
Right. Gotcha. Okay. So I want to switch gears and talk about your investors. You have, I would say, an A-list bunch of investors on your cap table. I'd love to know, how maybe you can mention some of the investors, and then how are you kind of leveraging their connections, their knowledge, their expertise in the fintech space?
For sure, we are very fortunate to have a great group of investors. Company has raised about 100 million in venture capital over time. Our most recent round was our Series C round, which was led by Venture Capital in June 2021. Prior to that, the leads in our A and B rounds, or the leads in our B round were Fintech Collective and OKHCFT, and the leads in our A round were QED Investors and Bullpen Capital, excuse me. We also have Mubadala Capital, Comvest, Laconia Capital Group, and really just a number of great names around the table. I think reflecting on the journey, first and foremost, it was not easy to get the first VCs to say yes to the business. Right. We have this human in the loop component. Everyone asks us, are you a software company or are you a services company? Back in the day, we did not have a very impressive gross margin profile. And investors wanted to know, how will this business scale? And I'm not convinced that this thing is going to be massive. So raising our first institutional capital was extremely challenging. And over time, as we had the automation and the proof points and the customers and the case studies and all these different things, raising capital continued to get easier, and we were able to attract more and more brand names to the cap table. I think, when we first learned that small business lending was going to be a huge market for us, we wanted to get smart in the space. And, myself and my business partner, we did not come from a small business lending background, and it was a completely new area for us. So the very first thing we did after that Capitus meeting was we tried to research what's out there. And we downloaded a white paper called the Brave 100, which was written by Frank Rotman at QED. Mm-hmm. And we kind of sent it around the office. We were like, hey, everybody study this. This is the Bible now. This is our Bible. And we read it inside and out, and we subscribed to QED's thought leadership because they were one of the real emerging leaders in fintech at the time. And we wrote to QED. We told them, hey, we're Ocrolus. Here's a little bit of what we're doing. And we kind of, got on this quarterly cadence where we would give them updates about the business and try to get them excited. Finally, in late 2017, we had our first institutional round coming together with Bullpen and Laconia Capital Group. We reached out to QED and they were ready to join, and they, co-headlined that round, which we closed in early 2018. QED was really instrumental in making introductions for us. They introduced us to a lot of portfolio companies and other folks in the space to help us get in front of decision makers. And we started really quickly growing the revenue of the business over time. That allowed us to attract Oak and Fintech Collective to the table. And then over time, we also added FinVenture Capital to the mix. So really great group of investors. It's been a pleasure to work with folks like Amaya Scarity at QED and Dan Petrozo at Oak, just to name a couple of them. And we're super thankful to have great support by people who have had fantastic operational backgrounds and also are very connected in the fintech space.
Right. Okay. So last question then. I'm curious about what you're working on now. Look, there's a lot of opportunity. It's really clear that this market is only going to get bigger, more and more. Everything is going to be, I mean, if it's not already required in as far as automate, like required to have solid analysis of documents coming in an electronic format. So you've got a good runway ahead of you. But what is the most exciting thing, the most interesting thing that you're working on right now?
It's hard for me to pick only one, so I'll take a cop out and I'll give you two answers.
Okay, that's fine.
One is expanding our mortgage capabilities. We've had fantastic, despite the crazy market in the mortgage space, we've had fantastic early customer success in mortgage, and it's clear that over time we can drive even stronger ROI in mortgage than in fintech lending. The reason for that is the existing processes have a big area for improvement. To move from the manual page-by-page review that most mortgage lenders conduct today to an API-driven automated process. We have expanded out our document capabilities, and believe it or not, we support over 150 document types today. To really crush the mortgage space, we want to continue to add support for new types of documents and also implement the ability to perform income calculations for more complex income profiles. Today, we support traditionally employed borrowers. There's a massive amount of opportunity to do the same thing for self-employed borrowers and more complex income calculations that require the processing and analysis of many different types of forms. We have about 40 customers in the mortgage space today. We do believe that over time, may not happen in 2023, but over time, the mortgage business will surpass the small business lending business and will be the larger driver of revenue at Ocrolus. On the small business lending side, I think that the name of the game is helping customers adopt to the current market conditions. So a couple of things that we're working on rolling out. One is a product called Qualify. I alluded to this earlier in our chat. Basically, the ability for lenders to instantly kick out borrowers that they should not spend more time with. We are providing lenders with a tool set to set their own kick-out criteria, and we can quickly notify them whether or not that borrower should go through a deeper underwriting process. The other element of our small business strategy is the combination of docs plus digital. So as you know, we started in the document space. Over time, we've moved more towards the fraud and analytics space. And moving towards fraud and analytics has allowed us to really become an infrastructure player where we can support a lender in processing a borrower's information, regardless of if that information is submitted digitally through a banking connection or through PDF or cell phone image upload or any type of document upload. So we have an excellent partnership with Plaid. They've been just a truly fantastic partner for us over the last couple of years. And we have a joint offering with Plaid where a small business lender can provide their borrowers the ability to either connect accounts or upload documents. And regardless of how the borrower submits information, the lender has one normalized, standardized way of assessing the borrower's financial health. So we take a lot of I think that the significance of being the bridge for both documents and digital is quite important and something we're very focused on in 2023.
Right. I'm glad you mentioned that Plaid partnership. I think that is really cool. So, Sam, it's great to finally get you on the show. Really great to chat with you, and thanks. Best of luck.
Peter, thanks so much for having me, and looking forward to some ping pong in May.
Indeed. Okay. See ya.